Hello, this is Mark from tradingforum.com and welcome to this video on a simple 15-minute binary option candlestick trading strategy. So this really is a simple strategy that we're going to look at in this video. It's a reversal type strategy, and what we're looking for is three consecutive lower or three consecutive higher closes, each of them with a minimum body size, and then the fourth candle to be a doji candle with a maximum body size. So we've got an example here of a successful trade. We have 1, 2, 3 candles, each having lower closes, and then we have our doji with a very small candle body there, and we have a strong move upwards. So the binary option type that we're using here is higher or lower than. So we would take a 15 minutes position, which will be closed at the end of this candle, which should be at 15:45 on this particular day. So we'd have entered here at the close of this candle, and we'd have closed it here at the end of this candle. I scroll on a little bit. I've got an example of a trade that wasn't successful. Here we're looking for a short trade, and we had 3 consecutive upward closes followed by a doji with a very small body again. However, what happened in this particular one is that the subsequent candle pushed up beyond this one before turning lower, so this trade would have been a loss. And if I scroll on again, I have an example of a short trade that would have been profitable. So again we have 1, 2, 3 nice strong candles in an upward direction, and the market stalls. It gets stuck at this particular point and then goes lower. Although I'm not interested in the rest of this going lower, I'm just interested in the next candle. So we would have entered at the close of this candle and closed at the end of this candle. Well, it's a nice theory that I'm advocating here of this being a useful trading strategy that could be profitable, but how do we find out whether or not it would have been profitable, which is the only way we can actually see whether a trading strategy is any good or not, and this is to backtest it. So I'm going to use Microsoft Excel. I've loaded in Euro USD dollar on the 15-minute time frame, and I've inputted from April 2010 to April 2014, so I've got about 4 years worth of data, 100,000 different time periods. We've got a pretty simple spreadsheet here that's going to look at whether or not the trade should be entered or not, and if so, whether or not the trade is profitable. So the first thing that I'm going to look at here is our entry criteria. And we're going to use the most useful, in my opinion, the most useful Excel functions, which is the if statement, and I'm going to call it if and. So I'm going to set a series of logical tests. If the trade, particular time frame meets, or time period rather, meets all those criteria, then we enter the trade. So the first thing I'm going to do is use the absolute function, ABS. I'm going to open the brackets. I'm going to take the opening price minus the closing price. This is going to tell us, close it yet, this is going to tell us how big the body is of the candlestick. Then I'm going to put lower than. I'm going to use an absolute reference here. I'm going to use this cell here. I'm going to press F4 to make it an absolute reference, which means that when this formula is copied down, we will still be able to alter it by using this cell. Okay, and I'm going to put in a comma, and the next thing I'm going to look at is the 3 consecutive moves lower, which is what we'll need before we have enter a long trade. So the first one of these, I'm going to use the closing prices, which isn't strictly the candlestick body. However, it does allow us to take account for the market gapping. So because obviously that can happen, it happens most often in between candles. if a piece of news or event risk is released. So in this case I'm going to make it greater than. I'm going to use this reference cell here, press F4 again, comma, and I'm going to copy this 2 more times. The 55 to 54, 66 to 65, 5 to 3, and to 4. And there we can see that it's correctly highlighted the 3 preceding bars that we wanted it to do. Okay, so if it meets all these criteria, I want it to enter the text long, and if not, I want it to enter nothing. Okay, so we're almost there. I want to just add one thing, and this is I want to only take trades that occur on the same day. The reason I want to do this in particular is, although the Forex market's 24 hours a day, and really I wouldn't mind if a trade actually took place at midnight, however there is a risk that the trade can take place following a weekend, and I don't want it to account for a weekend or market closure gap. So I'm going to make sure it's on the same day. Okay, now I'm going to do the same for our short trades. I'm going to do if and. I'm going to put the absolute again, the open price minus closing price. Again, it has to be lower than, make it an absolute reference cell. Then I'm going to take a preceding bar. I'm going to make sure this is greater than the max or the minimum size of the candles. And I'm going to take that one and copy it across. $65, $64, $64, $63. Make sure this is the same as this. And if so, then we're going to enter the market short. Okay, so I copy these down by pressing, double clicking on the small square on the bottom right hand corner of the cell. Do the same for both of these. I'm going to shift these up here. I'm going to just use the cut. I just left them there for convenience. I'm going to put them back up here where I've got the rest of my results data. Press calculate, and the spreadsheet's going to work out for us whether or not this trading strategy would have been successful or profitably traded during this time period. So we can see here from this data that we have 296 winning trades and 190 losing trades, giving us a win percentage of 60.9%. Assuming that the 80% payout, we would be profitable. We would be making about 4% profit on this particular trading strategy over this particular time period. If we wanted to trade it as a normal trading strategy, in other words, we would enter, pay the spread, and close in exactly the same time after the end of the next 15-minute period. We can see here that the trading strategy would have been profitable. We would have shown a profit of 227 pips over the time period, and a profit factor, which is the absolute value of the number of winning pips divided by losing pips, of 1.15. Overall, it seems to me that this trading strategy is probably better traded using a binary option rather than as a normal trading strategy. We're not giving the trade very much time to move in our favour, so the spread is going to take up a lot of our profits, even if the trading strategy, as it shows here, has got a higher than 50% chance of winning. So what I've done here below is I've broken it down into 2-hour time periods. We could break it down into smaller or in fact larger time periods if we want. I wanted to get a feel though for when this particular trading strategy is most profitable. Around the 55% mark is what we want to see if this trading strategy is profitable, and we can see that most of these bars are showing it's profitable. The ones that it isn't, it's possible there may be some reason. At the times here I'm using our GMT London time, so there does tend to be quite a bit of news release, maybe markets changing economic news out at about this time, which could mean that the strategy is less profitable around this time. Around 2 o'clock, again this could be US market news coming out, although it may just be a random feature. We don't know. We'd need more data to find out. However, overall, after trading 4 years and getting almost 500 trades, 60.9% is quite encouraging. It is a good start for a trading strategy, if you ask me, that needs to be 55% or thereabouts or more to be profitable. So what could you next do to improve this trading strategy? Well, we've already programmed in a couple of variables. We can make the doji body smaller, we could make the minimum previous candle size larger or smaller. We can look at the number of preceding candles. Maybe we want to have a stronger trend, maybe we want to see 4 candles moving in the direction before looking at a reversal. Or maybe we want to see fewer, maybe we only want to see 2 candles, or 1 or 2 candles, but very big and strong candles. Maybe we want to see a candle moving 10 pips before we enter in the other direction. We could also look at the colour of the body. Most of these dojis don't end on exactly the same number of pips, so maybe we could have a green or a red doji would be more or less profitable. We can easily test to find out. We haven't looked at wicks. We haven't looked at the number of whether or not if we have a wick in the direction of the trade, or in fact the previous direction, whether or not this could affect the strategy's profitability. Another thing that we can easily test using Excel is the momentum, whether or not the current price is greater than the price 50 periods or 150 or 250 periods ago. What is the previous trend? How strong is the previous trend? All of these things we can easily backtest and try to refine the trading strategy without over-optimizing it. Try to refine the strategy. Okay, so I hope you found this useful as an example of a simple binary option strategy that can be amended, improved, or worked upon to make it more effective. If you'd like more information about using Excel to backtest trading strategies and about the financial markets in general, please go to www.tradeinformed.com.